Well, hello folks, LA here. This is the weekly report, doing it for June 17th on the 19th. And what do we got this week? More moves to the downside. You know, we were thinking that we would probably get more pressure to the downside. That's exactly what we got. Oh, basically anywhere from 5 to 7.5%. We saw a collapse in the crypto world. Gold down, everything down except for the dollar. Year-to-date losses, 55% on Bitcoin, 25 to 30% elsewhere. Even the bonds down 25%. It's been a wild ride to the downside, and the question is it done? On the technical side here, this market's not going to bottom out until these interest rates change and the bonds bottom out. And right now, you're starting to see a little bit of a tell here. On the bonds, I'm using the LQD on this particular one, but you can look at all of them. They're all about the same. The Moonies, not the Moonies, but it was the Moonies. Actually, were showing a nice change to the upside. Still haven't got to the COVID lows, but this looks like it's trying. It could die farther, and that's why you just simply need to monitor it. But I think that when you see bonds bottom out, you're going to see these interest rates top out. You got the 10-year up here testing the highs right now, 11-year highs. And when they do, that's when we'll probably get a sustainable low. Speaking of a sustainable low, you're not going to get one also unless you get everything sold, and they finally are selling everything. XLE I picked as an energy sector, 17% this week, coming back at the swing point lows. That's on a weekly basis. If I go to the monthly basis on Bitcoin, finally comes back to test the swing point high, way more than 6 bars. This probably is a good place to take a shot at it if you want, and that may be true in other cryptos. This is the one I focused on. I know the Ethereum is also in the same boat. Could get lower, right? It's down around, I think it was around 13 on this particular one. But right now, this looks like a good place. You know, if you've been waiting this out, wanting to get into crypto, this looks like a good place to at least start nibbling. Equities. Okay, last week, if you remember, during the week, I said, hey, the thesis failed. We didn't get the sustainable bounce. This started to fail and roll back over, and the odds of breaking this increased. We broke it. We gapped down to start the week, I believe it was, and we just kept going, right? Volume escalates. Of course, part of that's the options expiration that happened on Friday. But still, nice, big, long move to the downside. Problem is, even though we're getting stretched here, there's nothing here to tell us it's done, right? Still have lower numbers, 3400s as targets on ABCD structures, and that's another 200 points to the downside, which is another 6-7%. So we may see that before this thing tries to turn. At the same time, if we look at the long term, right, there's good reason to believe that you might get the bounce here. We're at the 37.23 swing point low. That's typically where buyers are going to try and find support. That comes down into this high of the low, which is around 36, I believe it is. And so we may see the bouncing type situation start here. Now the problem is if it starts here, I suspect it's unsustainable, and I'll talk about that in a minute. NASDAQ, same idea, right? Coming into the swing point low on the NASDAQ. This is a monthly chart. This actually ends up being a critical low that needs to hold, because if we're going to get marked down, this is going to fail, right? That certainly sets up that potential. So critical low, you can see that there are lower lows that could be had, and now we have 3 of the 4 majors have broken their swing point lows in a long-term time frame. The only one it hasn't is the S&P, but the S&P is actually under it right now as we speak, and may or may not break this month. Finally, if we look at cumulative trends, we're getting to extremes, folks. This was the COVID lows back here, this extreme, and you can see we're not all that far away with respect to the extremes on the bearish side. If you look at the number of stocks that are bullish, we're already there. In other words, it's so pushed to the downside. The breadth is so bad that we're at extremes. Again, another reason to think there's a good chance that we could see at least some sort of a bounce take place fairly soon. On the geopolitical, I keep bringing up these two things. It's China and it's Russia. China actually starts looking interesting. Government has a change of heart. They're not pressing the industry as bad as they were, the tech industry. And they're sticking money into things, right? They're pushing things up with respect to their central banking policies. At the same time, Russia looks to me like they're gaining the upper hand here, and the landscape between the West and Russia is probably changed for good. And there's a little article here that was kind of interesting about that. They've been talking about it for a while, and I think they're onto something. I think that you've got a divide here, where Western currencies, are all based on these floating currencies that all are basically being devalued, whereas commodities, are holding and increasing in price, and Russia is focused on being this, whereas the rest of the world, especially the West, is still this depreciating currencies, which puts Russia in a stronger position if in fact they can pull it off. Fundamentally, last week PPI came in lighter. It didn't look that way because here's the month over month is year over year core, but I think you're seeing this thing topping out for now, and I think that's going to take some of the pressure off the equities. Retail sales fell off a cliff, but it was a little bit better than expected, actually quite a bit better than expected. The FOMC, the big thing was Switzerland raised rates. That wasn't expected. Japan keeps trying to QE their way to prosperity, and there's monetary collapse going on over there as a result of that with the yen. But basically, everybody's raising rates in most parts of the world. Next week, a lot of Fed speak at Powell on the Hill, so some PMIs. I think the main thing is, are we going to see markdowns on earnings? I mentioned this last week. And this week, you actually have a number of earnings to focus on. I'll start a spreadsheet and look at those and see what the reactions are. If they can't take these stocks down further, we may be seeing some sort of a bottom. Okay, bottom line here, focus on interest rates, focus on equities and whether they can build up some bullish ABCD structures on the 30 minutes and then the daily. Sentiments extreme, qualified trends, all of this suggest prominent rally risk is prominent. That I put the number out wrong last week. I think I said 10.7 something. That was the high of the low of the low on the NASDAQ, where we start to have a high probability of a markdown starting to take place, right? That's this number, and we're not that far away from it. Got within, a couple hundred points of it this week. We were correct in our assumption last week, or the week before, on one of the daily notes. I said, we got to throw that thesis out because there's more downside coming. That's what happened. Imminent bounce, if we get that, right, I think we're going to run into resistance. A lot of supply up around 3810, 3900. So in other words, if we just start to bounce here, I think this is the scenario. We'll bounce and then we'll roll back over and then we'll have to test again. The other thing that we could do is just, we're here and we could just keep going, right, and get down into that 3400 level or even lower. And I think that would set up a more sustainable bounce to take us back to this level or even a little bit higher, because by then you'd have some serious momentum. I don't know which one's going to happen, but I think those are the two scenarios to be focused on. On the trading plan, our gains have turned into losses for that which we track. What we're not tracking, of course, is those calls and puts that we're doing on options, because I don't have the ability to stick them in here yet. At some point I'll get that in there and we'll be able to track that as well. But I am offering on Twitter and in the notes the next day all of these notes suggesting, you know, any kind of trades that I'm making with options so that you can follow along if you want to. We've got some index puts in place. We still got the gold position. We got knocked out of the oil. On the SPY calls, you know, versus the puts on Microsoft, we made some decent money. Took that off last week. Coming week, what do I think? I think that you know, those two scenarios that we just talked about, we have to look at, and if you start to get the bounce, I'll try to play it. If we don't, then I'm of course going to want to try it lower. Right now, we've already got some VIX puts in place to take care of a bounce if it starts from these levels. Worst case, once more, and here's the extremes for next week. This thing could do the markdown, or it may get that bounce up into that area that we were talking about. And that's it for this week. Have yourself a great one. Stay safe. I'll see you next time.